Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market pullback for November 20th, 2018. We're going to go over the daily change. Every time the markets as a whole go down by 1.5%, we do a video going over the index changes, the news for that day. That way we can kind of have it for historical reference. So if you are brand new to the channel, I do make stock market, personal finance, and real estate investment videos every single day, or every single week. So consider subscribing, and let's go ahead and get into it. So the S&P 500 hit some turbulence today along with all the other indexes. So the S&P 500 fell down by 1.66% today. Year to date still positive, up 0.64. We will take a look here in just a second at what stocks fell down the hardest. The Dow Jones also losing about 1.5 down 1.56%. Year to date still positive here, 1.21, actually beating the S&P 500. Remember, majority of the year, the S&P 500 was outperforming the Dow Jones. Now, sector rotations going on. Lots of hedge fund managers are moving out of tech stocks and into these stocks that have been hammered in that 30 down 40% range during the earlier part of the year. We talked about this in our stock market weekly recaps. We talked about how the S&P 500 had been held up by a name, just a handful of names: Facebook, Amazon, Apple, Netflix, Facebook, Square, and many others. The tech stocks were holding up this S&P 500 for over 6 months of the year. And we were seeing that most of the other stocks within the Dow Jones, at one time, 50% of them were in the negative, down 10, 20%. So we did a video of that quite a few months ago. Kind of interesting here that we're seeing that move now from tech to consumer, utilities, and REITs, and a few other, there's a sector rotation. Nasdaq today down 3.03%. They were hit the hardest here, I believe. Yeah, Russell 2000 down 2.03, and the emerging markets also down 1.34%. So all the indexes all hit hard, plus the emerging markets. Currently, stock futures going into Tuesday are looking pretty negative right now. It's starting to pick up here. I just refreshed it. Here we're down nearly 1%, 0.5% across the S&P, the Dow Jones, and the Nasdaq. So expect Tuesday to be another really tough day to handle. So here, Google's really getting close to that bear market. There's many others out there in that bear market territory. We've been in that bear market for the majority of the S&P 500 already in 2018. Again, it was just a few names out there that were hitting those all-time highs that was really keeping up the S&P 500, but now those are popping, and the market as a whole is kind of pulling back to a correction where it's supposed to be. We were trading at 26, 27 price to earnings. Now we're back down at a 21 point some change as far as PE ratio. That's very low. So here, some of the most active stocks here in the after hours. Kind of going down the list, we have Microsoft moving up just slightly. General Electric moving down. Looks like they did pick up off their lows around $6. We have Apple down over 0.5% here in the after hours. That was a big one. So as Apple continues to get hammered, we're going to see the S&P 500 probably bleed off a little bit more as far as, here we, kind of take a look here. Financials are bouncing today. So take a look here at the consumers. Here we have consumer Johnson & Johnson. We have Pfizer. We have Merck, Exxon. So oil, basic materials are doing good. Healthcare. So one of the things I put out in my past video was that I believe that healthcare, consumers, so let's see, where's the consumers here? We have services. I guess they're kind of mixed in there as well. So here's the consumers. Okay, so we have Coca-Cola, Pepsi. We can kind of click on here and probably see a little bit more. Philip Morris, they're popping up 1.5%. So we can see that a lot of the FANG stocks, so Facebook down 5%, Google down almost 4%, Microsoft, Amazon, Oracle, Adobe just hit really hard. Apple down nearly 4%. So Boeing there. I know Boeing, I forgot what happened with them today, but between Boeing and Apple, they really destroyed that Dow Jones, but not as much as the Nasdaq there. Taking a look at 3-month performance, we can see that Google is nearly dead in that bear market, down 20%. Facebook's already there, down 23%. Amazon nearly hitting that bear market. Probably tomorrow you're going to see continued sell-off of Amazon, continued sell-off of Apple. Some people are indicating a price. This is, I don't know why this is showing 185. They're expecting a target for Apple to hit of 175, somewhere in that range. They could hit that low. We shall see. Johnson & Johnson bouncing very nicely. This is just over the last 3 months. You can see that Coca-Cola and Pepsi have been doing really well. Johnson & Johnson, Pfizer, Merck, CVS. So take a look here at healthcare. You can see that there's been a trickling of cash going into healthcare. You can see a trickling of cash going into a few of these consumer brands. Look, check out utilities over here in the green. Lots of green over here in utilities. Restaurants area, we can see McDonald's, Starbucks. Entertainment's kind of coming off those lows. Disney had been trailing pretty much sideways for what, 2014, 2015. So nice to see that kind of jumping up. Walmart. So many other names there. Check out finviz.com if you guys want to take a look here. All you got to do is head over to that website, and then right over here on the right hand side, you're going to see this nice little open map. I really like it as far as giving you a visual. So here you can see oil prices did kind of go up higher this today. Saudi Arabia came out saying, hey, OPEC, hey, Russia, can you kind of cut out your supply here towards the end of the year? And oil really liked that. Smaller supply is better for oil, so this could be a turnaround for oil. So if you're into that buy the dip opportunity, you can see over the last 6 months oil has gone nowhere but down. This all started here just not even like a month and a half ago. So oil was hitting those all-time highs and had sunk just over just the last few months. Let's just look at 3 months here. Here it peaked out early October, down over the last 3 months 11.77%. So this could be a buy the dip, as Saudi Arabia is asking Russia and OPEC to kind of cut their oil supplies. This could be a good opportunity. Dollar did lose some this morning, today during the day. Dollar did trend a little bit lower there. That kind of pushed silver up today 0.15. Gold also up today 0.04. You can see that gold has been bouncing slightly higher than silver. So if you're looking to dive into either sort of hedge your losses, you can dive into some silver, you can dive into some gold. Bonds stay pretty much flat. I would say a loss of 0.01 is basically flat for the day. If we take out bonds for the year to date, you can see here that we're kind of bottoming out. You can see a huge buy in here. Look at these spikes here in the past, and then look at this one. So there's a huge buy the dip that took place not too long ago, and we may see bonds move much higher from this point now kind of going forward. Bonds right now 10-year trading last yield 3.06. So here is the S&P 500. I want to just kind of show you guys before we dip out, but S&P 500 currently trading below both the 200-day and 50-day moving average here. We can see that it is currently way below the 250-day moving average. We haven't quite fell as hard or as far back as we were back in February or March, but we could be coming back into that 260 range. So as these FANG stocks start to deflate, we're going to lose a little bit. They're going to be sold off a little bit as people are panicking and selling. But it's a sector rotation. You're going to see utilities, you're going to see healthcare, you're going to see consumer, you're going to see REITs get bought up. And as those hedge fund managers pump money into these funds, you're going to see the S&P 500 begin to balance off, and it's going to begin to trend sideways. That's my prediction there. So here we can see that we're coming out of these highs. We hit highs in 2000, we fell. We hit highs in 2008, we fell, we recovered. And instead of falling again, we broke out. We've been breaking out for the past 5 or 4 years. We've been on a nice breakout. We may be on a cooling period now. We had tax reform, which would be really good for the corporations, but at the same time, we have rising rates. So as much of a tax cut as it's been for the corporations, as those rates are rising by 1%, that's making debt much more expensive. We're losing a lot of our buying power. I know as real estate goes, for every 1% that the rates go, you're losing 10% of your eligibility as far as what you can buy. So that is all I wanted to cover in today's video, in a nice 10-minute video. So that is it. If you guys haven't checked out my Facebook page, I do have a Facebook. If you head over to facebook.com/Financial Investor 101. I do have an article there talking about how currently in the current markets, this is no longer a buy the dip opportunity. it's failed us right now. But that is because we're going through a huge transition where tech stocks have been the hot stuff right now. So here, are you buying the dip? It depends on your style of investing. Facebook, Amazon, Netflix, Google, Square have been following. Will those recover anytime soon? Depending on your style of investing, dividend stocks will always continue to pay out that dividend. If you buy them correctly, you'll pay out, they'll continue to pay out those dividends. They'll grow their dividend. You'll buy more shares at this dip opportunity. And here, this article just goes over buying the dip is sort of dead, and it's just not working here in 2018. But that's a normal thing. We're kind of topping off, which is completely fine with the rising rates. We may trend sideways for a few. That's completely fine. If you look at 2014 to 2016, October to October, we only gained 10% over the course of 2 years. So don't fret. Just buy correctly, hold, average in, and over the long term, as long as you buy the correct stocks, or if you're buying the S&P 500, over the long term here, we can take a look here. The market does slowly recover and then continue to trend up. So that is all for this video. If you guys have any comments, suggestions, questions, let me know in the comment section below. I always appreciate all of you guys' comments. And of course, quick disclaimer, I'm not a financial advisor, tax professional. The information provided is for fun and entertainment. This is not investment advice. And thank you all for tuning in. I will see you next time. Remember to hit that subscribe button and hit that thumbs up button below. Bye.